Eric Muathe, Muathe.com. Let's take a look at a stock here, ZEEL, and it is an Indian stock. And what I can show you here is I find that more often than not, traders nowadays tend to look at the small picture and rarely look at the big picture. And I think sometimes you miss a lot of valuable information. For example, this is a 1-year daily. Of course, the stock has come off the highs here and now drifting somewhere here. So if you are trying to play this, you might be playing it for a bounce, or you might be looking for a break that might move it lower. So that's the 1-year view. I find that most people will actually spend a lot of time looking at a 6 months daily view. So this is a 6 months daily view, and again, yes, you might read something out of this, but I think if you don't look at the big picture, you miss a lot of valuable information, and more so if you take a look at the hourly. So you spend a lot of time looking at the hourly, trying to decide which way you're gonna go, depending on what you look at. For example, you might find this is support. You might on the top side there's some type of short-term resistance. So yeah, you might conclude the stock is in a wedge, or maybe that the RSI is finding support. Now all these are okay. So you're looking at the daily, hourly, that's fine. But I think we should always look at the big picture, because the big picture paints sometimes a more concise view of what is actually taking place. For example, this is a 2-year weekly chart. All right, and what we can see here is right now the stock is trying to decide whether it wants to find support around current levels here. So trying to find support around current levels, and we can see that it does make sense, because off the lows of early 2015, so this RSI movement was responsible, we can see here on the 2-year weekly chart, for this nice recovery off the lows here. And so we know that if it ever comes back to test the same sentiment or RSI level and find support, that could be a logical area for it to bounce. So we can see on the 2-year weekly that there is a reason for assuming if this holds and the RSI starts coiling back up, that the next meaningful direction is going to be to the upside. Now, with this information, you can go to the dailies and the weeklies to find out whether there's confirmation of this in terms of timing. Now I want to show you an interesting view here. If we go and take a look at the longer term picture, for example, this is going back 2011. Draw a line there, and I'll show you where this line comes from. But you can see off the lows of 11, we had a bounce, triple bottom support here for the lows there in mid 2011. We come here with uniform activity, which is the low there, and now we are coming here attempting the same thing. But where does this green line come from? So let me show you where the green line comes from. We have to go backwards, and this is now going back about 9 years, and you can see that the major low was here early 2009, and which corresponds with the RSI moving above this range here. That movement in the RSI in 09 brought the stock from levels here of under 50 to the current highs over many years of about 280. And so we can draw a line from here, which should be something like that. So this is a very, very important level in terms of sentiment, in terms of where this instrument has been bouncing since 09. Uniform activity support here for the lows again there. Triple bottom support here for the lows there. Uniform activity support here for the lows here. And again here we are seeing that it's very, very early on in the month of December. Today being December 5th, 2016. You can see that if this weekly chart holds, then chances are you might be looking at a potential for a swing trade to the upside. And at the same time, if we break below the green line, a break below the green line would be a change in how it's been behaving since 09, would suggest that now we are looking at an additional sell signal and a reason for a major pullback. So support is what is right now showing. Otherwise, if things change and we fail to hold support here, then that would also be meaningful. So the weekly chart here going back about 9 years suggests that we can look for reasons on the daily now and on the hourly to precisely time our entry. Now take a look at the monthly chart also. And here we have the 9-year monthly chart, so 9 years of data. And we can see that the stock has continued to hold above RSI 50 ever since it moved above the 50 level here during this period in 2012, continues to hold above that, generally saying that the monthly chart is telling us that the stock continues to be stable. Now if we go and take a look at all data monthly, we can see reason here to watch this level, because this was the breakout level. That breakout level began this nice movement of this level here. We see that the stock would go on to record a nice multi-year rally, and so we take this entry here, draw a line from there, should look something like that. So you can see the market has bounced on this line here for the re-entry on a monthly chart, bounced on the line here for the re-entry on a monthly chart there, and now we can also see that depending on whether it can hold back above the green line, then this should also be another area where one can use this as a re-entry. So once it turns positive for the month around here, would suggest that it wants to coil back up. Otherwise, as we noted on the weekly, failure to hold above this green line short term, failure to hold that green line and movement below that could be a sign that since 2012 something is now changing the landscape and the stock would be looking bearish. So again, the monthly chart gives us a view that is telling us support is good. If the weekly chart continues to show support, then we can use the daily and the hourly charts for timing purposes. So let's not forget to watch the bigger time frame, because the bigger time frame sometimes is even more clearer because it moves slowly than the smaller time frames. Yes, always consider the smaller time frames, but within the context of the big time frames. More so the weeklies and the monthlies, and if possible go back as far as you can, because stocks have an amazing history, and history tends to repeat itself, and stocks also have a good memory. Eric Muathe with Muathe.com. As always, good luck, peace and blessings. Woo! EACS.